All right. So we have quite a few new people, then we'll go over the basics of GEX and essentially why it's important to the market. So starting off, there are um, I'll get to questions at the end, Raphael. Let's start off with the basics. So there are a few things about GEX that you need to know. There are two different environments, right? Two different environments. You have a positive GEX environment and a negative GEX environment. What do each entail, right? That's a huge part as to why things are important. When it comes to a positive GEX environment, dealers are what? Question mark, right? So what are dealers doing essentially is the most important question per se. And when it comes to that, I'm sure all the OGs here know, and I've said it a couple of times in the classes, but why is it down here? Dealers are buying the dips, selling the rips. And what does that create? It creates more liquidity, less volatility. Does that make sense so far? That's just very basic GEX environment stuff. Let's scoot this up where there are no lines. Okay. In a negative GEX environment, dealers are what? It's the opposite, right? Dealers are buying the rips, selling the dips. Okay. So this is going to be super important. Let me add to that. Less liquidity, more volatility. Volatility. Okay. Right. That's the basic understanding of the different environments. How do you tell the environment? Once again, since there are new people, this is essentially how the total amount of GEX, right? On what each one, it doesn't really matter. They're going to be relatively the same, whether that's raw, right? Raw GEX versus de-adjusted GEX. De-adjusted is the one that we rely on more often in terms of magnetizing. Why? It's because it's a less naive version of GEX, right? Of raw GEX. It takes into account different calculations, and different things in general. That includes volatility and whatnot. But that's just why we. Okay, hold on. I got something in my eye. Can you guys give me like 2 minutes? 1 second. I gotta go to the bathroom and wipe my eye. Holy fuck. Why does that shit hurt so much? Frick, dude. Sorry. My eyes are still fucking hurting. Jesus. But where are my tissues? Ow. Okay. Apologies. Um, where was I? My eyes are still freaking watering. Okay, continuing. If there are any questions, and I know Liquidos is here, so thank you to Liquidos. He's one of our trusted admins. So anything, if there's any questions, Liquidos, if you could do me a favor and just answer them in chat as we go, especially if they're very basic or simple questions. Um, So where were we? Less liquidity, more volatility. Okay. And you can tell by the amount over here, and that just tells you whether or not we're positive. So this is positive 15.82, right? Obviously, if it's negative amount, it'll be like negative 7.xx or whatever. But yeah, so as for that, that's the very basic of positive in GEX. When it comes to positive GEX environments or positive, we'll start another one actually. Okay. When it comes to positive GEX, we'll just do characteristics. The most basic things about positive GEX, and you'll see it the more you look at the data, is like the way we relate it to and how to utilize it right away within the market is just your basic support and resistance. And that's not always the case. Just something to add into your arsenal, like off the rip, right? You have your defined levels for the day. You can just go out and start marking the big exposure levels, right? So support and resistance. And then as for negative characteristics of neg GEX, right? This tends to often act like accelerants. What do I mean by accelerants? We touched a little bit on that yesterday, but let's say this is a neg GEX wall, right? And then we kind of go through it. It'll kind of just go straight through and not really treat it as anything other than sort of like a passing, right? It'll kind of go like this or lower. And if you're coming from above spot price, you can just go right through it, right? So it's not so much a huge importance per se. However, if the position does go against you, this is something to consider. And on top of that, within negative GEX environments, as we talked about, less liquidity, more volatility, you're prone to those what we call V-shaped recoveries, right? So let's say market goes all the way down and we kind of chop. You're prone to V-shaped recoveries through neg GEX levels, right? So once again, that's just something to take into account. When you are in a negative GEX environment, you are very, very prone to V-shaped recoveries. And since they are accelerants, you have very high chances that you'll just blast right through certain levels, right? So I've touched on this many, many times. You can go back in the YouTube videos and watch it, but in terms of like going more in depth on it, this is pretty much like the reason as to why you see those V-shaped recoveries on big negative GEX days. And it's just strictly because dealers are trading with price action, right? They're buying the rips and they're selling the dips. So that's just something to consider. And I guess it would look something more along the lines of like this. You go right through it, you kind of chop around, right? A lot of people always think like, oh, let's just take a bear flag lower. No, if it's a negative GEX environment, it can oftentimes accelerate right through the levels, right? And just go straight back up. And that is like the epitome or the coolest thing about negative GEX is that you will literally get those V-shaped recoveries. So if you missed a short, don't FOMO yourself. And this is exactly why I talked about yesterday, why I don't enter near shorts at the low of day or break of supports. To me, it just, once again, shitty R to R, right? Why the fuck would you take this? Sorry, wrong one. Why the fuck would you take something like this if it breaks lower and then your stop loss is right here or whatever, and then you only target a few points when you have way better R to R, especially if there's a key magnet above you, something like this, and your stops are a little bit lower, or you size for zero, right? Your R to R is immensely different. And especially on negative GEX days, you are very prone to getting this V-shaped recovery, especially if you have no sort of catalyst that like negative news or some shit to the downside, right? Then you're very, very prone to getting these V-shaped recoveries. So just something to consider. A lot of people, the moment I taught that, they were like, holy shit, like that's why we see those huge V-shaped recoveries. And it's exactly why. So one thing, those are just some things to consider about these two environments. Other things about GEX that are very important, and we can go over that and what I talked about. So, or what I brought up today, right? There was a 15 to 20, and I talked about what's called a GEX flip. What is a GEX flip, right? GEX flip is essentially, GEX flip, it is essentially the area in which the dealer's portfolio can flip from positive to negative is it deltas? Is that the right word, Liquidos? Just positive, negative deltas, right? I believe so. Correct me if I'm wrong here. Or their books go from negative to positive, essentially. Because that's essentially what you're calculating, or what GEX is tracking. It's just overall, okay, just overall gamma exposure. Right, so that's essentially the environment flip as well, right? In the middle of the day, you can potentially get those environment flips, and that's pretty much what it is. For those who don't know what GEX actually is, it's the acceleration or the rate of acceleration of an options contract's delta with respect to a 1% move in the underlying asset. That's a huge mumbo jumbo. It's basically how fast the deltas can increase or decrease when the stock moves. I guess that's the simple way of putting it. And delta is obviously the value in which the options can go up or down. It ranges from 0.01 to 0.99. Obviously, multiply that by 100, and that'll be sort of the expected value in change for every dollar the stock moves. So let's say you have an options delta of 0.5, the stock goes up $1, then you make $50 on that contract. That's a very simple brained breakdown. That's obviously not how it works because that's only taking into account one singular Greek, right? But obviously you have implied things like implied volatility that can increase or decrease the contract's value. Same with theta, right? And a bunch of other things. But as for just the basic breakdown of those two things, that's what it is. Continuing forward, anything else for GEX that's super important? I guess I'll bring up ABS-D GEX. ABS-D GEX, also short for absolute delta adjusted gamma exposure. Once again, just a short-term name for that. ABS-D GEX. And what is it? ABS-D GEX is a magnet, right? What does ABS-D GEX look like? It's just the biggest bar on the split chart, right? So the green and red bar on the split chart. So let's just pull up an aggregate amount so we can kind of spot it a little better. Okay, well, 5320 is massive. So this is the absolute de-adjusted gamma exposure, and that's the level for it. And this is what it looks like. This is not ABS-D GEX, although an interesting level or an area in which market makers are positioned or market dealers are positioned. That is not the absolute delta adjusted gamma exposure, right? And the absolute, and that's pretty much what I use on a daily basis when I type out XXXX number is a magnet, right? That's exactly what I'm talking about. Does that make sense so far, guys? Have I lost anyone and everyone who's new? Give me some sort of a heads up in chat. Anybody? Make sense? Taking notes? Yes, perfect. All good so far then. Continuing to move forward. That's the basic rundown of pretty much everything that we pay attention to when it comes to GEX. By chance, Liquidos, am I missing anything? If I'm not missing anything, then should be good to move on. No, looks good. Perfect. One thing that I do want to bring up that was utilized today is the volatility skew on the GEX chart. Yeah, I figured I would just go into it a little bit. Yeah. So there are different ways to utilize the volatility skew. One specific way that I absolutely pay the closest attention to and pretty much only use the volatility skew is for the actual shape of it, right? As you can tell, this is the shape, right?
Yeah.
What at the very basics of what it is, and anyone who already knows this, please do not answer. Tell me something about this volatility or the shape of this line in accordance to this center point. Oh, that is a terrible fucking straight line. The center point is spot price, right? That's where we're currently sitting. What side looks like what? What side is steeper? What side is shallower? Somebody tell me.
Left side. Left is steeper. Right
The
is
left
shallow.
of the center line, what side is steeper and what side is shallower? And can anyone guess what that could mean? No chatters. I'll give it another 10 seconds. before I just go into it. Puts more expensive. Yes, puts are more expensive. Buy orders stacked. Not entirely where interest is. Okay. Close, and the concept is very in close in concept, right? Where interest is very, very close, right? When you see a volatility skew that is steeper, obviously puts are more expensive, right? Because the volatility on this side or the implied volatility skew is higher, right? Obviously, just on a numerical value basis, right? So what can you assume, right? The analogy that I gave earlier today to in the TraderLink Discord is that when you have a side that's steeper, imagine price is like a rock and you are pushing that rock. So if market is going to go up this volatility skew, wouldn't it be harder to push a giant fucking rock on us up a steeper hill? So that's why when we were down low, when we were lower around the R1 today, volatility skew was actually steeper to the left side. So it was much harder for price to go in that direction, right? The same way it is much harder to push a rock up a steeper hill. So these are just things you can consider, right? Once
Okay.
again, this is an aggregate view of the data, meaning it takes into account tomorrow all the way till the end of the week, right? And you can already tell that this side is a lot steeper, right? So downside odds, or the odds that we flush and go much lower, is going to be much tougher. IV low could be considered buy and sell. Yes, that's also a very good point. Liquido said IV low or implied volatility low, the lowest point on the skew, could be considered where buyers and sellers have decided the market is at a fair value, right? How does that make any sense? Think about it. Obviously, this side contracts are way more expensive. This side is contracts are cheaper. But at the lowest point is where buyers and sellers agree that that is a fair value to pay for said contracts, right? I hope that makes sense. I'm trying to keep it
Yeah.
as simple as possible. As for, yeah, so actually, Liquid, I was just about to answer that. So the side that's steeper usually means that those contracts that on the steeper slope are shorted, right? What does that mean? Short puts, right? Obviously, short puts equals bullish, right? And
Oh,
what does that essentially tell us? This
price will go and
anything below,
fluctuate.
once again, right? The odds are that we fall. So the flow below us, right? The put flow is more supportive today, or supportive on whichever date you have. Right? Does that make sense, guys? And vice versa. If it was obviously above us, the slope was steeper above us than the odds. Who's on the mic? Oh, it's Jonathan or Sheen. Sheen trades. Yeah. Anyways, continuing forward. Yeah, if since the slope is steeper, let's say it's steeper on the right side, it'd be market maker short lower IV means more sellers. Perfect. Right. So once again, think another way to think about it is if the volatility is higher and meaning the contracts are worth more, or implied volatility is higher on the put side, why would dealers not want to sell higher premium? Because they can make more on higher premiums. So it's vice versa. Why would they not want to sell if this side was if the right side or call side was steeper, right? Why would dealers not want to sell higher implied volatility? They rake in more premium. So once again, it can be very if it's steeper on the right side, it'll be very resisting. Versus this side, it'll be very supportive, right? Below us. I don't think there's anyone else on the mic that I know of. It's just me today. Anyways, continuing forward. But yeah, does that make so we've covered a few things, right? And let's do a quick overview before we go, or what do you call it? Summation before we go into the overview for today. So we went over the two different GEX environments, positive and negative. Oh, did I not mute somebody? Sorry, I don't have my earbuds on. Mute all. There we go. Anyways, So we went over two different things, a positive GEX environment and a negative GEX environment. Can you use this to trade ES futures? Yes, you use SPX data to trade everything, right? And if you're wondering, oh, but what about the contracts or what about the price? How do you convert the price? Just go to ES, look for this indicator. It's called SPY SPX ES price converter, and it'll tell you exactly where the price is. So if you're looking at ES, for example, right, you just go into the settings and you want to look at SPX prices, check SPX. I suggest putting the offset at 10 because it moves it all the way over. And now you have your SPX prices in correlation with ES. Right. You can trade it with SPY. It's the same thing. I use SPX data all the time to trade pretty much SPY only at this rate. Yeah, this is a super helpful indicator. If you don't have it, just you can refer back to the video, but it's called SPY SPX ES price and in parentheses PT, and you can just change the settings. But now let's go over the market overview for today because I think it was a solid day. I just don't think contracts or it didn't pan out the way I fully expected it to, but it panned out early on, right? So still a successful analytical day. Execution wise, not the greatest, but it is what it is. So we had a short zone. We based it upon this image, or this is the defined range for the morning. Sent this out at 6:38. Right, sent out obviously the levels as well in the morning, and those are all marked, the reversion levels. But this is our key range for today, right? You have 5,300, 5,320. 5,300 was the initial biggest level, and everything else is not necessary to understand. And then the other thing I pointed out was GEX flip is at 15 to 20, right? So GEX flip and GEX flip, I guess I forgot to bring up the importance of it on a usage importance, I guess, is that it can act like support or resistance because a lot of times dealers don't want their portfolios flipping negative or from positive to negative or negative to positive. So usually they tend to hold it below those GEX flip levels, above or below. But yeah, so we had the defined range of 5,300, 5,320, and a GEX flip at 5,315, in between 5,315 and 5,320, right? So now that we know that, we can easily go back into the chart, GEX flip, and then usually I put these right in between 57.5, the two levels, right? And going into this, you can also label it at 15. So 15 to 20 is usually like, oh, actually, I don't even know why I did this. You can highlight a zone. It's this tool. This is the start of the day. 53, 20, 53, 15. Okay, right? GEX flip. So within this area, that's where the GEX flip is, right? So starting off, right, we have our defined range of 53.20 and look at the day, right? The open was right around 53.20, maybe at the bottom of the open or the range of the open. It was 53.98. But as you can tell, we're always very close within a plus minus 5 points of each level, right? So 5,300 is right here, 5,320 is all the way up here, right? And we range from 5,397 all the way to 5,321.42. So as you can tell, it's very accurate in terms of determining what the range is for the day, right? I'm not going to sit here and lie to you. All I do is wake up in the morning, look at the range, and it's relatively defined. Not oftentimes will you get huge pickups unless we get like a huge dump. And by that time, when you reach a certain level, you'll see another pickup and then you'll see the others dissipate. The other levels or GEX levels become solvent. So with that being said, continuing forward, this was essentially the levels that we had been watching for the day. I caught this move down initially, and that was it. And the other runners, I didn't reach max pain, luckily. I got very lucky. I got lucky with a mistake. But this was the short that I caught initially for the trim. Obviously, not a great R to R, right? However, still a good executed trade for that one. So with that being said, continuing forward, the vol reversion level held near perfectly. along with the vol reversion level, we have the GEX flip at 53.15, right? This entirety of the zone, for those, I had it labeled as short zone, right? This was essentially where I was looking to go short, and we caught it perfectly. We top ticked at that moment, and that was called at the absolute beginning of the day, right? So as you can tell, if you just look at the chart purely, all these levels play out that the data shows, right? If I go back and just open this up, open or copy and paste the image, right? 5,300 at the bottom, 5,320 at the top. You have your short zone from 5,315, right? 5,315 GEX flip all the way to the actual flip up here, right? At 5,320. So it all shows itself on the chart. There's nothing else for me to tell you in the sense of like, oh, but like some other shit happened where, we pumped up or we pumped down past the GEX level and nothing picked up, blah, blah, blah. No, as you can look at the chart and the data, they all coincide with one another. They all show, and there's nothing. That's the best part about it. You can tell at the beginning of the day what the range is. You don't have to go through a pre-market range thing. You don't have to base it upon your previous levels or play level to level based off of candle wicks or whatever in the past or daily patterns and shit. No, you have your absolutely defined freaking range for the day, right? It's as simple as looking at the data, marking those levels on your chart, marking the vol reversions that I send out, and you will literally have all the levels you need for an intraday basis. Yes, this is recorded, so it'll be posted on our YouTube. How do we find that chart? Why only trade SPY? Because in the money contracts are great. I like trading in the money contracts because it's like trading futures but with options. So that's why I trade SPY. Which chat do I post the reversion numbers in? I post the reversion numbers just in the main trade chat in TraderLink. How do you deal with resistance gamma that turns into support while you're in calls? Sometimes they'll be shifting around spot price and finally use it as support in the next gamma level. Okay, let's talk about that, right? Very, very basic stuff. Let's say this is a positive GEX wall. You don't take it on the break. Once again, what did I talk about the past few or a couple of or yesterday, right? You never take it on the break. You take it on the retest and you make sure that there's another GEX pickup above, right? Another GEX strike, right? You take it on this play right here. Why? Let's talk about why. Yes, they both entail the same or similar R to R, if not the exact same. Let's say it's both, right? Your entries right here, and then your entries right here, right? They both have the same R to R. But if you're trading options, you have to understand the value of the contracts when it breaks a level and volatility picks up is going to be higher than when the stock comes back and retests this level. Why? Implied volatility is going to be higher when you go up to this level, right? When you break past a level and you just push up. Why not just wait for a retest, get the contracts for cheaper? On top of that, Theta, I'm sure will burn those contracts a little bit. And then you have better R to R. Yes, the R to R on the actual stock is the same, but if you're trading options, the R to R on the contracts are not the same, right? Please understand that. Always play the retest of a level. Never take the fucking break. I don't care if you've been a breakout trader and it's worked out for you for a little bit, but just you're putting on extra risk that just isn't necessary as a trader, right? And the whole point as a trader is to be able to mitigate your own risk while playing the highest probability play, right? This could fake you out, right? And stop here and then just plummet. And then you're fucking bagged. But right here, number one, your contracts are cheaper, so you can size better. You can size smarter, right? If you're playing, usually I attest breakout traders to having FOMO in their own personal life or having issues with FOMO in their own personal life. Why? Because the moment it breaks a level, they want in. The moment they get an invite, they're like, I'm down. Why not just wait? Wait for something to be planned out and then go, right? Better risk to reward. You still using SMT? Yeah, of course. I used SMT today. I'm gonna try and figure out where I did though. I forgot. Let's get rid of all this. So 1 minute chart. First SMT, which is why I hit a trim right here. Yep. Once again, ES took out the low, NQ did not take out the same low. Exactly why I hit a trim on that initial position when we got in on that the original short. Next SMT as to why we entered shorts. Back here. Right. Didn't happen earlier. And then what happened here? Took out this high. There was one a bit higher up. I just don't remember exactly which one I was watching. Oh, and sorry, here we go. Continuation to hold, right? You can tell right here, got taken out. Tell at the same level, did not get taken out, right? So another reason to hold the short. The moment I saw the SMT, I trimmed pretty much the rest of my or half more than half the position. Yeah, and then I got super lucky, and by the end of the day, I didn't want to exit the position, but I clicked the wrong button and it worked out well. So lucky me. Um, I just didn't get very good fills on the exits. The contracts are like 1.37 or 1.47, but when you click flatten, it market sells you and cancels everything. It sold me out at like 1.33, which I mean, it is what it is. But anyways, yeah, that's pretty much majority of the market review for today in terms of like how we spotted that level. If you're looking at puts for the day, you always look to play all three version levels, nice, vice versa. Usually how I will play them is I think R1 usually doesn't have a great probability of rejecting. I like at least waiting for R2 to come. Um, R3 is like your last ad or your second ad. If you add it only at R2, right? Similar to fibs, it's like, okay, let's take a light entry at R1. Okay, second level or in between level, take another light ad at R2 and then full size in R3. Right? That's pretty much like the same similar setup with utilizing the reversion levels. One thing to keep in mind is like, okay, I was talking to Gio about this earlier today too, is like about these in the money contracts. I can bag hold for the entirety of the day and still not lose the entirety of the position, right? Unless I really hit max pain. But if you have a defined range, you can easily select which contract you want to play. Once again, defined range is given by GEX. So SPY, what did SPY hit today? At the high, it was 531. I sold out like for like 1.33, so like 530.77. I had the 532 puts, right? So I know I have a very strong inclination since it's outside of the SPX range that the odds that we hit 532 and I experience max pain is a low probability, or it's more probable in my favor that we don't hit that level and by the close and I experience max pain, right? So that's exactly why I picked that contract. Yes, you can go way more in the money, but at a certain point, the deltas are practically negligible and the return is not as good, right? A 0.8 delta and a 0.9 delta, not a big enough difference for me to put in an extra like 10 contracts or like a 20% increase in position size for a relatively same return. Does that make sense? Hopefully that makes sense. I kind of just ranted. But I know there are some new people from Zach Morris's Discord that have been absolutely loving the data. So and it's been helping them, which is nice. I love seeing that. Um, but yeah, continue. Oh, yeah, continue with the questions if there are any more questions. But once again, this will be uploaded to YouTube. You can go back and watch it. Uh, I highly suggest you go back and rewatch the previous classes, like the intro to GEX and then the deep dive into GEX. I think those are very important. And I think those have a deeper or a more amount of knowledge, or not knowledge, more amount of information in those videos than this sort of quick rundown summation class. But if there are no more questions, then the next thing, can you post the YouTube link? Yeah, for that class. Let me pull it up. What's my main trade time? Yeah, open to like 9. And then I kind of try not to be in a position at 9 o'clock. If I'm in a position at 9 o'clock, it's usually because I'm back holding. I just posted it for you, Brian. I usually don't like trading at the end of the day. That's just me personally. I can't stand like putting up that amount of extra risk. It's just not worth it for me. So like the last hour, I try to fuck off. You can trade. No, I don't trade before open. First 90 minutes, or first like 2.5 hours. Yeah, I agree. I love trading. Like today, I traded, took the play, held the runners, and or held the rest of the position. Position didn't go my way, but honestly, that's fine. What's 9 for you? I'm Eastern. 9 is 6 a.m. for me. So I'm Pacific. So I trade from 6:30 a.m. to 9 p.m. Pacific. So just the first 3 hour, 2.5 hours of the market. So from yeah, I take my lunch the same time Eastern should take their lunch, and not at 12 p.m. or at noon. Because once again, there's usually low volume and not enough volume to get, if especially if it's like if I'm in puts, the odds that we start sinking during lunch are very slim. Let me think what else is there that I can bring on. But yeah, today was like June and I traded in the morning, streamed in the morning, and then June and I went to just go get Starbucks, and then he left, and then I went to go run errands, and then pretty much just held the rest of the positions, came back to my desk, clicked the wrong button, and then was left with the rest of the day. Went to go play some golf, and then ran some errands again afterwards, and then came here. I just play ODTE. I play my trading style is playing SPY ODTE in the money contracts. I usually pick contracts with a point 0.8 delta. But I've traded futures. You trade every day. Yeah, I trade. This is my job. It is how I make a living. Well, alternative if SPY doesn't move. I like watching Nvidia. I like the way Nvidia moves. QQQ in the money, similar thing because you can easily calculate it. If I'm feeling like an old degenerate myself, then I will go back to playing like SPX ODT out the money. I've dabbled in futures. I traded futures. Used to love trading Amazon when it was $3,000 a share, but now it's asked. But that's pretty much like the majority of the stocks I watch. It's just I pretty much just pay only attention to SPY and QQQ. I'm getting into shit coins though. Is it possible to make day trading in place of full-time job? I mean, you need to prove yourself profitable first. I hope you get rugged. Yeah, we got rugged by the fucking fees, bro. I didn't know crypto fees were that fucking expensive. Those gas fees, retarded. Yeah, I don't really give a shit about the strike so long it has a point 0.8 delta. Bro, like it was just to buy fucking Zach's coin. It was $100 in fees. I was like, what the fuck is this? Are there any meetups for day traders? No, I don't run any meetups. Usually SPY options like relatively in the money, like anywhere between 2.0 to 3.0 for the contract price of SPY, I'm okay paying. I usually like to shoot for right around 2.0. A little bit above is fine, but I don't usually like paying anything more than like 2.8 because if I do, then I know I'm overpaying. So like right now, a 534 has a 0.85 delta, a 533 has okay, this is lagging. 533 has a 0.85 delta too. That's wild. Okay. But yeah, played Qs on the money con today, felt a lot better about holding. Yeah, see? It's easy to hold. You can fucking bag hold forever and still not experience like max pain. You don't experience theta either. You don't experience volatility drop either. The contracts have value because they're in the money. Very easy to calculate your break even on the day. Also very easy to calculate how much you what percentage down you'll be. It's very easy. It's very nice playing in the money SPY and QQQ. I stand by that. It's literally like trading futures, but with options. Just sometimes the fills are ass because the spread is like fucking 10 to 15 wide or 0.1 to 0.15 wide. Look, I talked about this too. You won't make the craziest percentages, but think about this. If you're playing in the money contracts and you get the position where it fucking market randomly dumps, like that visual, like go back to yesterday's class and watch and look at the visualization that I had versus like an out the money contract versus an in the money contract, right? It's a huge difference. And let's say you're in the money and you've been holding for like 3, 4 hours and you get that gnarly end of day move, right? Or midday move. Yeah, you may have bag held for a long ass time, but guess what? You caught the move that you were looking for. It allows you to hold for your thesis. But if I buy time for 0.1, it doesn't matter. Yeah, I mean, you could buy time for an extra, like the next day's contracts for out the money. Same thing. All up to the preference of the buyer. Bro, Zins has been running out of flavor so quickly. That image I posted of me having fucking 30s pack or 30 cans of Zins, I'm down to 9. Yes, there's way more slippage in trading in the money. You oftentimes you won't get filled at the mark. You'll have to slap the ass and you'll be down like a couple percent. Which trading app you recommend for day trading? I recommend Thinkorswim. Fuck Robinhood. Get off that shit. Robinhood is assholes. That's just my personal opinion. Robinhood is so user friendly. Yeah, Robinhood is user friendly, but once you get used to Thinkorswim, you'll never go back, in my opinion. I've tried IBKR and didn't like it. I've tried Tasty Trade. Honestly, not a bad platform, but it's mid when it comes to day trading. Thinkorswim has just been the most consistent. And I've gotten refunds from Thinkorswim too, so I vouch for them. Like whenever if I placed a trade and it didn't go through and it didn't make me money, and so long as I had the order there, they've given me refunds. Yeah, T Tasty Trade is great for spreads, terrible for naked. Yeah, TOS is I love TOS's mobile app. I think that's the one thing I absolutely love. I've tried other mobile apps and TOS is still the best. TOS mobile and desktop. I use both. But TOS mobile is the best one because the charting is great and seeing your positions are great. Executing orders are very easy. So TOS mobile is the one of the best like trading apps. The scripts for TOS are unmatched as well. Oh yeah, that too. If you're a coder and you want to code your own shit, TOS like being able to code on TOS is very easy. I've been dying to see when this next fucking dump comes, man. The amount of fucking rallies, I feel like Gio and I had PTSD from fucking like Apple. The 13 days of fucking green on Apple, absolute shitter. But like this rip up, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of straight up, and now 1 day of red and 3 more days of fucking up as well. So like this has been, you can't go up higher without coming down lower first, in my head. Yeah, 5,500 for that JPM collar is fucking wild. I'm gonna keep getting bagged on fucking intraday shorts if I keep holding. I just need I think for like after I hit my first trim, I just slam break even. We're in Discord. Do you save recordings? I need to catch them. It seems like I missed some really good content. In the Discord, it's on our YouTube channel. Most of the recordings, if not all the recordings, are on YouTube. I do. It depends on the market. I just like it, right? Okay, so if you go to SPX, right, oh, I just deleted everything. Let's see if it shows up. No, it doesn't. But let's say you open up in between the reversion, right? In between R1 and S1, or you open up in between the GEX level. I will play whichever side comes first, right? So let's say there's a GEX level above you and we push up to that. I'm shorting that level. Let's say there's a GEX level below you and it's support or it's the bottom of the range, then I will play that. How do I overcome blown accounts? You get a job, throw more money in. That's what I did. Like as shitty as that sounds, you just gotta have another stream of income, right? You have to have another stream of income. My most success from trading came from when I had an extra stream of income, like a good amount. Like I was working at a hedge fund and I was making about $4,800 a month after taxes. And that was like that covered all my expenses. Whatever I had in my trading account, if I blew up, it didn't matter because all my expenses were still covered by my job. What's the strategy to play ODTE, 2 or 3 trades, or average out of scalping or full board? Look, that's completely up to the user or the trader themselves and what they're willing to risk. How I grew my account, once again, without a bit of luck in the market, you're never gonna win. I hate to break it to you, but that's just how shit works. No one is ever 100% right. I fucking stand on that. Yeah, 100%. As I just said, Liquidos too, it said the same thing. It's easier when you have steady money since you won't be worried about what you're losing, right? You need to make sure whatever money you're making outside of trading is a solid amount and that can cover all your expenses, right? I had a car payment and I knew how much money I usually spend going out. So I knew whatever I put in or that I had in terms of expenses for the month was all covered from my work, right? Because in a month of work after taxes, I would make $4,800. I didn't have rent to pay, so I easily just threw whatever money I would have put into rent into trading. That's what I did. So I know everyone's situation is different, so that's why it's like when people ask that kind of question, there's not really a good answer. It heavily depends on your own situation. And as for a strategy, look, once again, depends on your situation. When I was making good money at the hedge fund, all I did was I would just throw in that money and I would full port it because I didn't care what happened to the money because I had everything covered anyway, or I had everything covered already. I wouldn't put in what I needed to use to pay for shit, right? I would draw that line for myself. Right? You have to understand your own personal position before just jumping into trading. It is what it is at a certain point. Yeah, maybe you can't trade and take a break. Get your money straight first. Get your personal finances straight first. You can't think trading is going to solve your problems. The more you rely on the money from trading, the more you're going to lose. That's just how shit works. Like I said, my most success from trading came from when I had a job. Highest hit rate, highest percent returns. Like for those who remember and are OGs that are in here, I know Liquidos and a couple of other ones that were in here. Gio and I had the fattest win streak when I first started my job. Do you like selling puts? Yeah, I sell. So on my long-term portfolio, I sell puts and I sell, well, not really, not anymore because all my like I sell calls mostly on those. Yeah, last year during the fucking summer, Liquidos knows we had like a 3 month winning streak of not losing a single fucking trade. It was I mean, that was once again a little bit of luck plays and everything, right? Last summer was fucking awesome. Yep, 100% right, Lick. That shit was crazy last summer. Right. But on my main and my big portfolio, I have one set aside for day trading that I don't really give a shit about whether or not it's like, and that's like 10 grand in that account. That's just usually what I day trade with for fun. My long-term portfolio easily makes like, I don't know, maybe like 10 grand a week just selling calls. I mean, I'm looking at it right now. I have 250 shares of Nvidia, 400 shares of Google, 1,000 shares of STNE, 200 shares of Apple, 200 shares of T-Mobile, 600 shares of TSM, 50 shares of American Express, 3,000 shares of RITM, 4,000 shares of SoFi, 500 shares of ANET, 4,000 shares of QYLD that pays dividends on a monthly basis, right? The market value of QYLD is $70,000 and it's guaranteed 1%, 1.2% every single month. So that's guaranteed $700. And that's before selling covered calls on any of these, right? And every single like position that I'm in on my long term that when I bought at pretty good lows. Why can't I pick this up? Make sure, right? Every long-term company that I'm holding that I haven't sold out of is green as shit. This one's Nvidia, absolute monster. And I just sell covered calls on them once a week. That's it. You sell covered calls if you have a big enough portfolio or if you have, money for profits from trading. That's what I did. I took all my profits and just bought shares and sold covered calls. Like that's how you continue building your money. That's the biggest difference is like you have to continue building it. If you don't know how to continuously build it and you just continuously lotto your shit in the stock market, you're not gonna fucking make anything. That's just the reality of things. Run that on a raw. No, that's just a traditional account. I never started a Roth. I probably should have, but it's because I didn't run into money until what, 2023 or like what, no, 2022 to quarter 3 of 2023. Quarter 3 of 2023 was when I made pretty much all my money. And like an idiot, I spent a lot of it and I only kept like 500,000 from everything to throw into long term. I wish obviously I look back on certain situations. Um, but you're young, you're stupid, you don't know what to do with the money other than spend it. So that's what I did. But luckily I saved enough to create a long-term portfolio. And that's only one of my accounts. If I go to both, I have oh, yeah, these are two accounts that I have. One is for dividends, one is for long-term holds and selling calls. But yeah, any more questions? If there's no more questions about like the data or trader link, I'm gonna end it here. We've been on for 54 minutes and I need to feed my dogs and take them for a walk before the day ends. But thank you guys for tuning in then. With that being said, I will see you guys and we'll run it back again tomorrow. Every single day, 5 p.m. Set your reminders, put an alarm clock, and then just name it Sheen Trader Link, right? And if you guys enjoyed the class, it'd be awesome if you guys could tweet and at TraderLink, Apex on Twitter. If you don't have a Twitter or whatever, if you don't want to, that's fine. I don't really care, but it'd be greatly appreciated if you guys did do that for us. Tag at TraderLink Apex, tag at Sheen Trades, and just say that you appreciate it and enjoyed the class. So thank you guys for tuning in. I'll catch you guys tomorrow again at 5 p.m. PST. And as always, keep moving forward, guys. Thank you so much.